Silver's worst enemy kicks it back down. I knew this would happen. Silver's being pushed back down after its strong rally. In this video, I'm going to break this down for you and show we saw this coming. It's silver's oldest enemy rearing its head in a big way. Let's start with this article from Bloomberg. It says US dollar's extended reign delivers stark wake-up call for markets. And when this author says markets, what they really mean is the silver market, because the dollar is really doing something bizarre. The article starts by saying the world's financial markets are encountering a force they didn't bet on for 2024. A strong dollar is back and looks set to stay. Now, as silver stackers, we are in a bind. We struggle. We have a struggle with our moral compass because, let's be honest, we stack silver because we know that this system based on a fiat currency has a dollar that is constantly losing value over time. We understand that. And that's why we are our own bank. That's why we stack these metals like this silver that I'm holding in my hand here. We swap out our fiat currency for a safe store of wealth in precious metals. But the honest struggle is that along with that, yes, we live our lives. We live in an economy in which it benefits all of us to have a strong dollar. So yes, when the dollar is weak, our metal that we put all of this money into shows strength. So in a way, maybe in the back of our head, we want that dollar to weaken, to continue to weaken, because it proves that what we're doing is a correct move, right? It shows that we are on the right track and we're not crazy. We're actually doing the right thing. Now, at the same time, we also need this dollar to be strong because we're living in an economy. We go to work and we need food and we need shelter and all that, right? So this is the struggle that we have as silver stackers. But the dollar is showing strength, and silver has been reacting the opposite up until actually the past 48 hours. Silver, for a stretch of time, was following the strength of the dollar, which is so bizarre. Anyway, let me show you this article. It says, having entered the year predicting the greenback would decline, investors have been forced into a rethink by a red-hot U.S. economy and sticky inflation requiring the Federal Reserve to hold off cutting their interest rates. With the International Monetary Fund predicting output stateside will grow at twice the clip of its group of 7 peers, talk of U.S. exceptionalism is rife and supporting stocks and bond yields, adding to the dollar's appeal. And in a time of mounting geopolitical strife, the currency still stands as the ultimate currency haven. Now, literally within the past 48 hours, the geopolitical tensions that most of us had on our mind regarding Iran and Israel have been somewhat eased, and that it does make sense that the dollar is continuing to show strength as those tensions have eased. It also reflects the price of silver and the price of gold, because as the tensions ease throughout our globe, when that feeling of uncertainty is eased a bit, people will pull out of precious metals, or they will not put as much money into precious metals, right? Because this safe store of wealth, that term safe store of wealth, really refers to safety. Not just for wealth, it refers to safety like in our mindset, how we feel safe. And whenever we don't feel safe, when we feel uncertain, and when I say we, I mean everyone in this country, when we feel uncertain, when we feel like things are out of our control, we tend to invest or put our money into precious metals, into silver and gold. This is not new. This has been going on for decades. So now that tension within Israel and Iran has been eased a bit, it makes sense that we're seeing a drop in silver and a drop in gold. I don't believe that is the only reason we're seeing a drop. And let me show you what this article says about it. The article says a Bloomberg dollar index has gained more than 4% this year, reflecting advances against all major developed and emerging market counterparts. One popular gauge of trader sentiment pointed bearish at the start of the year, but has since flipped to become the most bullish since 2019, according to data from the Commodity Futures Trading Commission. The article continues, among those recalibrating their strategies for the dollar is the world's second biggest money manager, Vanguard, which is now calling for sustained strength. UBS Asset Management says the dollar has probably got further to rise despite being 20% more expensive than it's typically valued. 20% more expensive. Meantime, Wells Fargo Investment Institute capitulated on forecasts for weakness by year end and now reckons it will extend its climb through 2025. So we even have Wells Fargo making a big pivot on the strength of the dollar. There's some factors that are pushing the dollar stronger. And one is we're seeing this week that there are many currencies throughout this globe that are struggling, right? We have Japan struggling with their currency. We have many emerging countries that are struggling with their currencies. And what typically happens is when those countries, those emerging countries, we used to call them developed countries, when they struggle with their currency, that means trouble for the dollar because they owe their payments to all of their debt that they owe to the United States. They owe it in dollars. But good news for the dollar is that many of those emerging countries have been storing. They've been stocking up on dollars, so they have them ready to give to us, which is great. It's great for the dollar. It keeps the dollar strong, and although it is great for the dollar, it is not so great for our silver price, which we were watching in the past 2 weeks really shoot up. And now, even when the dollar was strong, past 2 weeks, even 3 weeks, even though the dollar was very strong, silver was still strong. But now we're starting off this week, and it is looking as though silver has met its match and is starting to act the way it typically does against that dollar.